Hey everyone, just doing a sound check. We'll get started here about 1 minute. Welcome everyone to the final hour live stream. Sorry I couldn't get in a little bit earlier today, but this is what we have. So we're going to go through the next hour. There's a fair amount of things that I need to talk about that are going on. I see somebody ask what caused this last hour pop. I've been trying to figure out the same thing. Just looks like, some of the stuff that's, I guess, floating around on the street right now is, there was a story that said, well, the 10-year stopped going up, so everybody started buying. Well, it's still at looking at it here, it's at 150.54. If you want to call that stop going up, I guess it's not going up at the moment, but I'm not sure what triggered that. So maybe if you folks are seeing anything out there, feel free to put it on the chat line so we'll all know what's going on. I'll discuss it if I can find out what's actually going on other than more buyers than sellers. And that's usually my smart ass answer on all of this stuff. So welcome to the live stream. Like I said, I will come on live again tonight. I'll try to get through all the things that I want to cover here on the live today as far as what's going on with the markets. There's a couple elements that go on, so I'll do this right up front. And a lot of folks have told me that their taxes aren't going to increase in this new deal that's being flaunted around. And you've got the president in trying to convince a couple people to vote along the party lines, which we'll see what happens there. But I've said this before, if we don't get a deal this week, it's just going to get harder and harder, and the only way they're going to get it is to downsize it from 3.5 down to 1.5. But I saw an interesting story, and I suspect most of you saw this as well. They're proposing an 8% per mile tax on everybody that drives a car. That sounds like people under $400,000. So they found a way to put and there's other things they're doing with IRAs and other types of taxes and levies that they're going to put on everywhere in the economy this thing gets through. So we're going to go from what we have been operating in, which is the 2017 tax laws, to something new and something much more restrictive. And I've been talking a lot about the employment situation starting to deteriorate here as we come into fourth quarter. I still think that's going to happen. It's going to be interesting. We'll get the claims numbers to come out tomorrow, see if there's still a trend toward increasing, and the continuing claims actually bounce back to 2.8. That gets anywhere above 3 million, maybe to 3.25 again. That's not a good sign as we go forward. So there's a lot of things going on out there. And for the most part, what we're seeing, just a comment about the current market activity that we're seeing right now. For the most part, what we're seeing is what we already saw last night. We did see the futures up about 20 handles. The NASDAQ was up 70 at one stage. Right now, it's pushing up 64. So we're getting back towards the lofty levels that we were printing last night before I started the live stream at 9 p.m. Eastern time. So this is just kind of more of the same, but this is also that rebound rally I talked about. We got STX buy signals pretty much across the board on all of the indexes yesterday. So that's what we're seeing. We're seeing that clawback rally. I still think there is some positivity or some positive trends still on the intermediate that have not completely faded. We talked about the key level 43.35. We've only had a low today. Looking at the futures here, low at 43.55. So we printed those numbers yesterday. It's a decent test. We're just going to see at least another day of sideways as we come into Thursday and the claims numbers and some of these other metrics. And it's interesting that there seems to be a dialogue growing on the street that somehow everything's going to be okay. We've got earnings season coming out, and that's going to be, as we come into October, that's going to be all good and things are going to go back up again. I'm not sure that's the case yet. I think this earnings season that we have coming up is going to be very challenging and might be the first time in well over a year that we're seeing things that aren't going to be that statement better than expected. And so it's going to be this, we're finally coming into that tipping point as far as the metrics in the economy and other things that are going on that are likely to drive the markets one way or the other. And as I've talked about, our database is down to 25% on the short-term database and 25% bullish. So, 3 out of 4 stocks have no trend mode right now on a short-term basis. We're still running about 50-50 on the intermediates, but I'm expecting to see that change even if the market ends up flat for the week. So those are things I'll talk about on the 9 p.m. Eastern streams that I do every night. So we'll talk about those things then. So let's kind of focus in on some other things that are happening. Energy, and that's a big story. And I saw some comments last night on the live stream from folks in the UK and some of these crazy numbers that are happening there. And when the market popped, I turned on CNBC for a couple of minutes to see if there was anything out there could find out what's going on. But they were talking about interesting things. And when we get live with the charts here in just a minute, I'm going to show you, we're going to look at some of these energy situations that are going on, nat gas, coal, all of the fossil fuels that I guess the current administration here and many others, the Paris Accord, everybody's anti-carbon fuels. Meanwhile, I think in the United States that electric cars are 3.2% of the total cars out there. So I've been arguing that this isn't going to go away, and it's going to be very difficult to hit these metrics and all of these things that you would expect that the government talks about are just that. They're just talk. And as far as meeting these goals, there'll be a million reasons why they can't meet them, and they probably won't, but it sounds good. And so all this stuff is window dressing and all that. So there's 2 other things I want to discuss, and then we'll get on and we'll look at some technicals in the markets. The other thing is this reconciliation bill that they're trying to get through. I don't, like I said earlier on, I just want to say a couple more things about it, is that I don't see this thing happening. And that tells us a couple actually positive things. So there are some positives that could come out of the failure for that bill to get signed as it's being presented right now. Depending on what you look at, the bill is got a face value of 3.5 trillion, where you got the House reconciliation side, they're looking at 4.3, and then there's other estimates by the OBO and other folks that are saying it's as much as 5.3 is 5.5 trillion. And I discussed in last night's stream, we talked about the Fed has added $4.3 trillion in the last year. All of this money going in, we're seeing the inflation, and that's where I'm going to go next. When we first go to charts, I want to look at the energy and I want to look at cover the Baltic index that we talked a little bit last night, and just bring a little more perspective. Like I said, these live streams that I always have done on Wednesday give me an opportunity to go into some other depth and bring in a little different flavor than what I normally do on my evening shows. So let's go ahead and start to look at some of these charts, but I want to start with some of the energy stuff that's out there. And so I'll bring up TradingView here. And these are my PPMs on the charts there. These things are going to get released, and I was supposed to do this in the opening comments. I'll do it right now. There's a day and a half left in our special with Portfolio Expert 20% off. So make sure there's a link at the end of the meeting and one at the beginning. And there will be one in the description as well that you can go to and take advantage of that. So, but let's go and look at this coal here. And what we're seeing is something interesting. Coal is supposed to be the naughtiest thing on the planet, right? And what we're seeing here is coal prices surging. So I haven't had an opportunity. I'm going to dig into this a little bit to find out a little bit more about what's going on with coal prices. This happens to be coal futures in India, was what I found earlier, but it reflects the price that's happening. And as I said, you know, it's not about electric cars, it's about electricity and other elements that are still driven by a lot of these fossil fuels and will continue to be that way for some time. There's not enough solar panels that you could put up to power the world, and there's plenty of sun depending on where you are. If you're in Arizona where I'm at, there's plenty of sun, but you may not be there. You may be in Connecticut where the sun never comes out. So the point is that we're seeing this increase in the coal, and this increase is even due to demand that's coming in right now, or there's some shortages and disruptions by some things. So don't have a lot on that, but I want you to see this. We're also going to go to the so I'm going to go to the nat gas, and there's a, you know, it's down today. It's down right now. Let me just find the right metric here. Yeah, so we're down right now about 4.5% or so. And this is a big story. All of a sudden, oh, it's off the highs. Well, if you look at the trends, you look at the PPMs, they're still very positive going on nat gas. So this squeeze that's happening here looks like it may start to consolidate here. And that will be what we'll be watching for. But even a consolidation suggests that there's still higher prices going down the road. Now, this is a weekly graph. If we go out to monthly, you see this big basing period that's been going on in nat gas. And I think if I can go back a little further, let me just see. Yeah, back in 2008, and more specifically in 2005, I had an old, one of my institutional investors also did a lot of Reg D deals. They did raise money for nat gas people. And I remember when this price printed up here in 2005, and I told this guy that, hey, this is a high that's going to stand for a long time. We got a secondary rally up, and then we went down to where we have been right now. So we've got what, leases being shut down, supplies being constrained a little bit. This is a real easy fix. Turn all the spigots back on in the U.S. and this price goes down. So we'll see if the pressure of the price continues to keep this market under pressure, but also keeping the inflationary stuff. There were originally some things that were in the energy companies to try to keep prices down for maybe lesser privileged people, but this is actually being challenged because they're breaking through metrics that are raising prices for everyone. And that comes to really the reason why I'm talking about this right now is the inflation story that's building. So energy's one of those stories. I'm going to put up here the BDI index, which is the Baltic Dry. I'll just leave that on the side screen for the moment. But this is a monthly view. We are vertical on this right now, but here's a better view of this chart here. As you can see that after the initial stoppage of the economy back in May of 20, we're just seeing this index just keep going. It's vertical. And I haven't checked on the numbers. The last time I heard was probably a week ago, so the numbers are even the same or worse, maybe a little better, but there were about 60 container ships in LA Harbor and in Long Beach trying to get in. And of course, they have to be unloaded, put on trucks, trains, you name it. And there's shortages just about everywhere in the trucking industry, in rails, all of this stuff. So it's very tight. So that's why we're seeing things not available again. You go to the stores, there's a lot of stuff that, gee, where is it? Well, it's not getting constrained. I saw a story that Costco is already warning everybody that paper goods and some other things are going to be short supply not because they just can't get them there. They can't get the shipping channels and the transit to be able to deliver these products. So that's going to be a continued constraint. You throw weather and other things in the demand on all these things I just talked about, from the coal to nat gas to all of this, and you've got rising prices most likely. And the scenario that I've been talking about for a number of months has been that inflation is not transitory, that it's going to be much more permanent than you thought it was going to be. And that's exactly what we're seeing here, in my opinion. We're starting to see all of this pressures come together at once. And I think Jay Powell is finally coming around and going, well, it looks like this is going to stay around longer than we thought. Well, we knew that months ago because they're just jawboning everything that's going on. And certainly with recent events, the Fed's voice in general is losing its credibility with these presidents, trading stock that they were pumping up. So I won't go in a rant about that because that's very upsetting, because all they did is announce their early retirement. So they still get all their pensions or whatever monies they continue to suck off the government while they made all this money in stock. So they won't be punished. They'll just, let them go. They'll retire. And, I'm sure Powell called them and goes, I need you to retire, not you're fired. So there's no accountability again in all of this stuff. So let's start to dig into some of the technicals and what we're seeing here. I'm going to do a run on a bunch of markets intraday and what we're seeing here. It's interesting when I bring up the market grid here. We're going to the S&P, and I bring up the market grid, and you'll see that S3 was 85.02. So far the high 85.57. So pretty much a spot on hit there on the S3. Last night on the 9 o'clock show, I actually put out there that I thought we would have around an S1 R2, which was a 73 high. Well, we printed up to an R3, so we expanded that. One of the things that's still out there, and it's starting to moderate just a little bit. This is the S&P cash. We'll go to the futures here in just a minute. But we're seeing the PPM acceleration to the downside kind of stall here. And it looks like we're, based on yesterday, I just put a cursor on this, yesterday's STX buy signal, we typically will get 1 to 2 days of sideways. Sometimes it'll extend. The element that's in this pattern here is going to be the 10-period moving average. That's 44.09, dropping 10 handles a day. So that's going to be 43.99, 98 range tomorrow when we come in. So that's going to be your resistance. But if the ppm1 is above 0.15, then there is some vulnerability for that level to be penetrated and possibly get back above 4,400. So I'm going to go to the weekly because I want to show you this test that we saw yesterday. These numbers are slightly different than the futures just because of the ranges and the time zones at the futures versus the cash trade-in. But 43.53 was the 21 period moving average, and we printed down to 46, just below it. We finished up at right now we're at 76 on a weekly basis. The extreme STX 43.54. So if we, and I'll talk about this as we come into the next couple night videos that I'll do at 9 o'clock on that show. We'll talk about this number and whether if we get a close below 43.54, I can put it out there right now, is that will suggest at least 1 to 2 weeks of sideways trading, and we could enter into even a larger trading range than that. So that's something that we can definitely expect as we go forward. So this test looks like a good one, but here's the thing that I want to point out. If we look at the ppms on this page, we're starting to see a lot of decel going on here, and that is especially ppm1. We're right at ppm2, sorry, right here. I'll just put a cursor here. ppm2 is at 0.5159, and it's vulnerable when we get to that level. If we do get a penetration of that, then we'll continue to see the weekly trend that I have been touting going back to April and actually most of this year. That angle of attack is starting to change, it's starting to dissipate, which tells us that there's potentially a rollover depending if we can get a close under that 43.53. This S&P cash is, you'll see the potential to start to move down toward the extreme 41.60, and that number is rising a little bit, about 15 handles. So 41.80 could end up to be about 4,200. So there could be another 170 points on the downside. That will only be signaled if we get that close under that 43.53 this week. Next week it'll be a different number. So that's something I'm watching. But this deceleration in the ppms on a weekly basis are definitely a warning sign. And one of the things that I will be discussing on Sunday night's show is what's going on with the database on an intermediate basis. So I believe the markets are actually trying to make a statement, and the statement may be that we're going to go into a further correctional phase, but we're right at that point where to make that call at the moment is a tough one, but it's getting easier with that decel in the ppm. So that is we'll keep watching the nightly shows and you'll be able to see that. And if you're Wave Tech or a portfolio expert, you'll be able to see that there as well. So let's go to the futures just for a second, because the same number is evident there, and these numbers move around. Bear with me a second. So here's a number here, 43.37. I talked about this, the extreme 43.35. We printed 43.34 yesterday. So that looks to be a successful test. But what we're seeing here is the same thing that we're seeing in the cash S&P, as you would expect, is we're seeing the deceleration of the ppms, which are suggesting that we're going to continue to deteriorate. This trend is starting to at least enter a high-level consolidation, and we'll have to see how that all comes together. I'm going to go one step out here and just look at the monthly graph, and this is also showing us something that is important. So we look at the extreme for the month of September that was plotted out a month ago, basically, was 43.24.25. Low so far, uh, 42.93. So we printed under that low, but once again, look at the ppms here. They are all starting to cross over their first derivative on ppm 1 and 2. They're still highly positive, 1.94. Anything over 0.25 is bullish. So there's a great underlying trend. There's still an angle of attack, but that 10-period moving average is down at 4,100. And that number will be moving up about 80 handles. So I mentioned earlier that around that 4180, 4200, that's going to be your major support as we come into the month of October. And I know a lot of folks will be talking about seasonal tendency on October and all that stuff. I'm just telling you, there's pretty major support if we get down there, and there's definitely some negative trends trying to develop here. On a monthly basis, this will take multiple months to actually get to the point to roll over. Okay, so it's half past the hour. I just want a couple other things that I want to cover today, since we're somewhat limited on time. Is going to be, well, I cover crude every night, so I'm not going to worry about that. I do want to address two things that I normally don't cover. I want to go to the US dollar, and we'll cover gold, and we'll definitely get into Bitcoin here in just a minute. So I have been discussing for some time, and I've seen a lot of comments on here that I'm wrong about the dollar. The dollar's going down. It's never going to hit this goes back to last June when we started to move up. I told everybody my expectation is that we're going to go to the 200-week moving average. That's right now, that's 94.79. We're printing 94.33. So we're there. We're also, though, I want to point out, if we stay at these levels coming into the end of the week, that's going to put us into an RTX sell signal, suggesting a couple weeks of sideways trading. And that's what I'll be watching here and correlating this to the gold chart and activity in gold. I believe this is the big driver in the decline in gold. Twofold. We got the treasuries going up. We got the dollar rallying, and gold's going to get hit on that, right? There's no way to get around that. And I laid out some pretty good numbers in last night's video. I'll talk about just a couple minutes here, but this is the primary driver here. It's interesting because we see some, like I talked about with the energy, you get energy moving up, and a lot of times energy has issues with higher dollar, and that's not coming into play right now because there's other things going on. As I've talked about on the energy side, there's definitely more of a disruption of supply. That's probably the case with the coal and that gas and all of that, because they've been squeezing the supplies through lack of, I guess, allowing the U.S. energy patch to actually do what it's capable of. That squeezed it down, causing prices to go higher. So if any other major disruptions come in, you're going to see more of the energy prices across the board, whether it's coal, nat gas, or fuel on any level, will start to also increase quite a bit. But this dollar is definitely on a run of its own. And what I want to do here is go to the monthly chart. And the monthly chart is also getting up. There's a couple metrics here that I want to point out. It's now above its 21-month moving average, 93.91. Now we're still slightly negative, but if you look at the ppms here, you'll see they're all turning up. And this is not the top of this run. This is the beginning of the run. So there's a number of levels that I think we could go up to, and the next level that we'll be looking at is 95.28, and above 95.28 you're going to be looking at probably a 98 handle or higher. So the dollar is going to get stronger. So I'm going to talk about the impact on gold here in a minute, because I believe that's going to be the primary thing that you're going to have to pay attention to. You shouldn't have a position in gold right now. I still think we're probably going to test that flash crash low of several weeks ago at 1677, but I'll get into details here. But this dollar chart is very bullish, make no mistake, and it's going a lot higher than people think, and probably because of the market. I'm just looking at time here. I'm going to just bring up the 10-year for a minute. So this is all related, because everybody gets what's going on with the interest rates all of a sudden. So let's go over and just take a quick look at that, just to tie this story together. So this is monthly again, and we look at the monthly patterns on the as far as the PPMs go. They're accelerating. We're at 5.26 positive. You folks have been hearing about this pattern. This is a very bullish pattern. It's I call it a rising 10 in the middle of this pattern in the market grid. It's almost guaranteed that we will see this move up to at least the 40-period moving average, 171. That's going to put us testing. If we get there, we will test the 175 level, and ultimately there's a lot bigger numbers. I'm going to draw in a quick swing on this thing, just so you can have somewhat of a handle on this. So when we look at this pattern here, it's a classical right pattern. We got PPMs all turning up. Typically what's going to happen, this is also a dragon head formation. You're going to get a move above this 40-day moving average. You're going to get it to move up ultimately toward the 200-week moving average. Now this is declining slightly, so there'll be somewhere most likely around 220 and above. So I guess I didn't expect that I would get into this, but I want to cover something, because I think it's important to cover. So sorry about that. Sorry about that. Yeah, sorry for the disruption. But anyway, one of the things that people don't realize, everybody thinks the Fed raises the rates. Well, the Fed in history has been simply a mechanism to follow the market rates. So right now, if you look where we're 130. We traded down to 112. We've actually seen just about a 0.5% increase in rates. Now, the Fed didn't do anything, but they are losing control of this market. I've talked a little bit about this. So what's happening is that the Fed is somewhat allowing this. I don't want to get too deep into this, because I'll cover this tonight in more detail, but I just want to mention it. But what's happened already is rates have already increased. Fed doesn't have to do anything. They're increased. They were 1.127, I think was the low. We'll call it 1.13. Now they're 1.54. So they've already increased a 0.5%, or the better part of it. So what we're looking at is going to 175, 2%. There's all your increases. And the Fed is going to most likely be forced through the markets to raise rates to adjust to market conditions. This is the way it's worked, folks. For those of you who haven't been around for 42 years, this is how the Fed always worked. Their rate moves were always reflected of the market rate moves, not the other way. So the way everybody's been looking at things, oh, if the Fed doesn't do this or that, the markets have all the control. And that's what you're seeing right now. This is the perception, the sentiment in the bond market that's reflecting. This is the reality of the inflation story that I've been talking about. This is everything that we've been talking about on this channel for months, okay? And it's starting to happen. And so when you get to this level, you're at that, almost at that tipping point, and that 40 period moving average at 1.71, that's going to be your tipping point. If we get there, 1.75 won't matter, and you'll continue to see like a 1% increase, and the Fed could be forced as early as November to at least do a quarter of a point or a half a point if these rates play out like what we're looking at right here. The market will cause the Fed to follow it, not the other way around. I know everybody thinks it's the other way around. It has traditionally, going back a long time, this is how it works. And so this is interesting to watch the Fed let the markets lead the way and not put, they really don't have any control here. And this is what I mentioned a couple times casually. I'll go a little more into this, is that this is not casual anymore. The markets are now driving the Fed. It's not the other way. So everybody's, oh, the Fed might do this, might do that. That's totally does not matter. What matters is this, the market rates. So market rates can drive the Fed to make actions to adjust to the current market. And that's fine. So as far as everything goes here, I just want to put that out there because everybody seems to think it works the other way. Like, oh, rates can't go up if the Fed doesn't do something. Oh, rates can. And if you get to a point where anything, let's say the debt ceiling doesn't go through, let's start talking about some other elements that come in, new taxation, other things that are going to drive maybe people away from treasuries. There's a lot of scenarios, too complex to try to generate off of the cuff here. But these are things that are likely to happen as we go forward. So the Fed's already pressed into a quarter to half a point move. They won't do a half. They'll do a quarter. They probably won't do it in October unless if these rates stay and they stabilize at a higher level and they print up to this 170 level I'm talking about, they will have no choice in November to do at least a quarter, probably another quarter in December before year end. And it's not going to be as drastic of an event that everybody's going to think on the whole taper because it's going to be an adjustment to market rates. We'll see how it plays out. But right now, they're stuck into a quarter move minimum at the moment just to start to adjust. So I just wanted to put that out there. It's kind of one of these random rants that I end up on. We got about 15 minutes to go into the close. And it's interesting because since I've been talking, the S&P has been fading pretty good. We're down to 70 after printing 85, so we're 15 handles. There's not a lot of conviction on the long side of this market right now. Folks aren't interested in that. So let's go on and I'm going to bring up, this is the monthly gold. This is the number that I want to just point out. Then we're going to do a Bitcoin. So just bear with me 1 second, okay? Okay, yeah, so the gold on a monthly basis doesn't look as bad as it would look when you look at the short-term window. But I still think it looks like we're going to retest at 1677. I'll go into full details tonight. But this is just a quick look. The PPMs on a monthly basis are also penetrating and showing deceleration of the trends. So I feel like I covered everything I wanted to cover here. So let's do something here and and I think it'll be somewhat interesting. But let's do a couple individual stocks, and I'll finish it off. I mean, we'll go in the last few minutes like we do on normal live streams. We'll watch the close together, but I'm just looking at these numbers right now, and they're starting to fade pretty quick. So let's take a look at a couple things that I think are you guys tell me what you want to see. I do think that Kathy's Casino is in really big trouble. Kathy Wood is the ultimate buy the dip trader. She now owns 16 million shares of DraftKings. And to me, it looks like that. As a matter of fact, I'll start with that while you guys are giving me some names. Oops. All right, I thought I knew the symbol on this thing. What is that? Guys, give me a symbol on DraftKings. I'm drawing a blank here, but I'll go ahead and cover some of these others. Yeah, I have a theory also I'll talk to you about, and this is a classic. All of the COVID stocks, we're looking at Zoom here. I just put it up on a monthly. Let me go to weekly. All of these stocks that did really, really well, these IPOs that did really well, I'm expecting most of them to go back to the base of where they are. Let me just grab. I've got a list on my Trading View on my phone that I made a list of, and these are most of these stocks, not all of them, are actually the candidates for this. But this Zoom is just, man, this talk about a dog with fleas. This is the daily. Let's go to weekly. And Zoom is just in big downtrends. Minus 3.05, minus 0.52. This is in basically a secular downtrend. So my expectation is that, like I said, a lot of these stocks are going to go in. Stocks like GRW. Let me just find docs are doing okay, but let's look at here. PLTR is internally stuck in a 20 handle, maybe 25 to 15 is the extreme there. PUBM, that is just a stock that can't get out of its own way, and it's actually looks like well below its IPO. There's no value in a lot of these stocks because there's not enough history. Like PLTR has actually been a business that's been around for a while, but even then, I mean, there's no way to equate any type of growth to these. So a lot of these stocks, and if you went through all of the Kathy Wood stocks, I could bring those up in our other platform. I'm not going to go there. There's not enough time. But a lot of those stocks, they're just terrible investments, and they're highly risky. And I think that like ARK-K, if it gets below 102, I was kind of being a troll on Twitter a number of months ago. I said it could go to 65. It gets under 102. There's not going to be anything to save that thing. And, so it's all, I mean, let's face it, there's a lot of big bets in some of these stocks. I just brought up the weekly Tesla, and I'll touch on this for a minute. We're looking at the Tesla still grinding up in that upward channel I've been talking about, 727 major support. As far as the PPMs go right now, they're still very positive. So that intermediate trend is still good. But if this thing starts to roll over in the next couple of months, then we're going to see a potential move down well below the 700 level. 650, I don't have an estimate on those numbers right now. But right now it's still in a positive mode. We still have that upward slope. PPM1 is 1.92, so that's positive. We should continue to move this stock up. And right now, there's really no numbers out there that I can point to as far as targets. I've talked a bit about before that the 780 level where we're trading now is going to be, I'm sorry, that's, let me see here, 780 is going to be a big number to get through, and we're trading there right now. So we get through that, it's possible that, we get all the way back up and start to test the 884 highs, and some of those numbers. You see, 940 was the high on the stock. So we're getting very close to starting to move that there. Yeah, so let me look at a couple stocks here. Yeah, thanks, Bob, for that. Yeah, NG, okay. DRKNG. I'll get it right yet. So this is, I don't even know how to put this in true perspective, but this is an absolute terrible stock. Think about this. There was a time not that long ago where the gambling stocks, this was a good stock to play the gambling stocks. Well, now, I mean, watch any sports, whether it's college, NFL, you name it. You got Caesars, Wynn, you got all the major casinos out there. And, I saw a comment somewhere, it was on a Twitter feed somewhere, and somebody made a really valid uh, comment about this company. I mean, they're betting and betting. You look at Wynn and some of these other Caesars, they've got all kinds of entertainment and casinos and other sources of revenue, and the way that this thing's being priced right now and the multiples that it's being priced is ridiculous. So probably we end up coming back into at least testing these lows around 40, and then ultimately, and by the way, a 40 moves a 20% move from where we are right now. PPMs are all rolling over as we speak right now, so there's not a whole lot of data. If I brought up our other platform, I could show you a little better view of this, but there's enough here to look at. And so it, I guess the first level we're going to have to look at is the 42 level, and below 42, it's, old term, Katie bar the door, you're probably going to 35 or less. So be careful with this one. I think they have, it's sort of like maybe what Tesla ends up with, having so much of the competition against them that they can't do, they really can't expand their business model. So like Tesla's got, everybody's going electric now, right? And I think it's going to be interesting to see. I could be wrong, and I've been wrong, that the whole electric EV thing is not going to get the traction that everybody expected. And so fossil fuels are going to be around for a very, very long time. All of our lives, I would suspect, certainly mine since I'm an old dude. But the issue here is that this is just on DraftKings is what it is. Let me see what else you guys got. Yeah, I can do. Let's do Apple, because this is another one that's rolling over as well. Apple's up today. We did have, this is something to watch very closely. We had a cycle low come in. Let me get full screen so you can see this. The Apple came in. This is going to be the key low to watch, 141.27. We get below that, then you're probably heading at least to 135 and maybe back down to this previous level, which would put us at the, somewhere down in the 125 handle. So that could be a thing. PPM1 is in a trend mode down. That indicates that there's major resistance, 147. So you can certainly sell against 147 probably all day. This is a weekly chart, so there's going to be substantial resistance there. The only thing that we're trying to determine now whether this cycle that is being printed here is a bottom cycle or not. Yeah, by the way, the S&P is just coming apart into the close. Let me go over there just for a second. I'm going to put you in. Sorry for the quick music. I just wanted to go on pause. I didn't realize there was music on that. So, but here's what's going on here. We're now only up 6 handles on the futures as we're coming into the close here. We got about 5 minutes. Maybe we'll hang around here and do that. And I don't think I covered Bitcoin, so I will do that when we end. Okay, so that will be the final thing that I do. But yeah, let's just watch this close right now. We're only up 5 handles now. Heavy selling coming into the close. This is going to be, I think, an interesting close here. We are right now 4 handles off the low of the session. So if we go over to this chart for a minute and put the ES up, we go to daily. See if we can get a perspective here. Yeah, you're getting, we printed, as I mentioned earlier, 78 was a high in the futures. R2 was 43.76. So the S1 R2 number that I discussed last night in the 9 o'clock show is pretty much playing out here. We printed just above R2 on the futures. We printed R3 on the cash. And now we're trying to head toward the lower end of the session. And like I said, what was yesterday's close was 43. So now we're 47. So it's possible, depending on what happens here in the next 4 minutes, that we could actually close below that number. We could close under 43. That would be a lower close after trading higher all sessions. So like I said, there's nobody willing to make any big commitments here on the long side of this market. Yeah, so I just come back on screen here as we watch this together. We're seeing that this PPM here just really turn sharply lower. So it's going to be interesting. We've got 2.5 minutes to go, so let's just stay with this screen. I think it's going to be interesting. I mean, we're already finishing on the lower end of the range of the day, which is somewhat negative. We might see a continued bounce. Remember, we had the STX buy signal yesterday, and what did that signal? Sideways to slightly up. Typically, we do R2 after a STX buy. We actually printed just a touch over R2, so it's actually following the pattern. Here we are. We're printing down to the lows of the session here. So let's continue to watch it. We're 2 handles, actually 175 off the lows a second ago. We printed down to 46 even. Evens are trying to trade again. Now we're 7 even. A little bit of buying, but it's really just kind of back and forth stuff here. Here we just traded all the way to 48.50 and back to 7.50. So there's getting into that almost final minute of trade. And I'm going to go full screen so we can watch this. Then I'll come back on. We'll discuss the close, and then we'll go through Bitcoin and we'll call it quits for the day. Okay, where are we at here? We're printing 47. We printed a 46 low. Trying to stabilize. It's going to be an interesting. This is coming into the final minute. This is where the truth is told. back to 48.75. Last minute we printed, this is the final minute, but last minute we printed 46 even. So now we're seeing 49.25, a little bit of covering up here on the close. So I'm probably not going to get that negative close from the standpoint of closing below yesterday's low. Bear with me 1 second, folks. So yeah, so we're trending 50-50, so there's quite a bit of covering coming in as we come into the close. Okay, that was it, folks. That was the close. We covered up a little bit. We didn't make new lows on the day, but we still closed at the lower end of the range. So let's go over to Bitcoin. We'll call it quits there. I'll come back on screen for a minute after we cover this. So Bitcoin is still in this short-term downtrend. We've seen the dailies actually move to a negative position, ppm 1.39 minus 1.08 and 0.34. And that key number now in the pattern that's turned south is the 10-day moving average, 43,173. That's going to be major resistance. You can see going back the last 3 days that 10 has been dominating the top end of the range. So a simple 10-period average on a daily chart will get you some pretty good resistance. Now what's happening with ppms at 1.39, we're going to have to stabilize, go sideways, or this is what I call an inverted dragon head. Typically this suggests that there's potential for lower numbers here. Let's go to weekly, and weekly the 45.67 is going to be a substantial low. We printed down to 47.78, and we're looking at S2 45.13. So we've basically been down to an S2. Next level below that, S3 38.653, and I think if we print down into the 38 handle, that's going to be somewhat concerning. And just looking at the ppms here on a weekly basis, they're starting to roll a little bit. We're looking at 0.64, but we're through the first derivative, and ppm2 is actually substantially negative, and that's what's drawing this market down towards 45.66. So we get below that, then look for the potential for 38.6 on this thing, and I'll keep an eye on this over the next couple 9 o'clock shows that we do. Okay, folks, this is going to do the end of the live stream. I appreciate everybody. I know I didn't get to a lot of these stocks, but at least we got to a few. And, you know, I'll be on at 9 o'clock tonight, and we'll see what's happened between now and then. So have a great rest of your day, and I will see you at 9 p.m. Eastern Time tonight.